In every era of great change, fortune favors not the bold but the prepared. As we stand on the cusp of 2025, the financial world seems to tremble on a knife's edge. Whispers of recession, echoes of past crashes, and the dizzying speed of technological disruption create a fog of uncertainty. Most people see fear, they see risk, they retreat. But a select few, the truly smart investors, see something else entirely. They see a pattern. They see opportunity. This isn't about predicting the future. It's about understanding the past to master the present. So, where are the smartest minds putting their money when the market looks this scary? The answer might surprise you. To understand where we're going, we must first look back. Think of the great economic shifts in history. The Roaring '20s gave way to the Great Depression. The dot-com bubble of the late '90s burst, leaving a trail of digital debris. The 2008 financial crisis brought the global economy to its knees. In each instance, mainstream sentiment was caught completely off guard. Panic selling erased fortunes overnight. Yet, in the aftermath of each crash, new empires were built. Ray Dalio, founder of the world's largest hedge fund, Bridgewater Associates, famously said, "The biggest mistake investors make is to believe that what happened in the recent past is likely to persist." Smart investors don't just react to the news, they study the cycles. They know that fear is a market signal, but not in the way most people think. It signals that assets are being mispriced, that irrationality is taking hold, and that the greatest transfers of wealth are about to begin. They don't run from the fire. They look for what will rise from the ashes stronger than before. So what is the hidden truth for 2025? It's not a single stock or a magic bullet. It's a strategic shift in mindset. While everyone is distracted by the daily noise of market fluctuations, smart money is focusing on a few core, unshakable pillars. These aren't just investments, they are fortresses built to withstand the coming storm and thrive in its wake. The first pillar is something so fundamental it's often overlooked: indispensable infrastructure. We're not just talking about roads and bridges, we're talking about the backbone of the modern world. Think about the data centers that power our digital lives, the logistics networks that deliver everything to our doorsteps, the energy grids that fuel our industries, and the water systems that sustain our cities. These are not optional. As the global population grows and urbanizes, the demand for this core infrastructure will only intensify, regardless of market sentiment. These are monopolistic, high barrier to entry assets that generate steady, predictable cash flow. While tech stocks might be volatile, the need for electricity and data is non-negotiable. Smart investors are looking at infrastructure ETFs, specialized REITs, and direct investments in companies that own and operate these vital systems. They're playing the long game, investing in the very foundation of our global economy. The second pillar is a revolutionary force that many still underestimate: the tangible tech revolution. For the past decade, the focus has been on software, social media, and the digital world. But a quiet revolution has been brewing in the physical world. This is the realm of advanced robotics, industrial automation, 3D printing, and biotechnology. Why now? Because global supply chains have shown their fragility. Nations and corporations are desperately seeking to bring manufacturing back home to make their operations more resilient, efficient, and less dependent on geopolitical whims. This is called reshoring, and it's fueling a massive wave of investment. Companies that create the robots that build cars, the AI that optimizes factory floors, and the biotech that engineers resilient crops are no longer science fiction. They are becoming critical national assets. Investing here is not about chasing the next social media app. It's about investing in the companies that are physically rebuilding our industrial base. This is where innovation meets necessity, creating a powerful long-term growth trajectory that is insulated from the whims of consumer trends. It's the hardware behind the software, the real-world application of our digital intelligence. Now, let's address the elephant in the room: fear itself. The market looks scary because uncertainty feels scary. This brings us to the third and perhaps most critical pillar: asymmetric opportunities in distressed assets. When fear is at its peak, good companies with solid fundamentals can be unfairly punished, their stock prices plummeting along with the bad. This is where the wisdom of investors like Warren Buffett shines. Be fearful when others are greedy, and greedy when others are fearful. Smart investors aren't just buying indiscriminately. They are meticulously hunting for fallen angels, strong, profitable companies in temporarily out-of-favor sectors. They look for businesses with low debt, a strong competitive moat, and a clear path to recovery that the market is too panicked to see. This could be in sectors like energy, certain areas of real estate, or established industrial companies that have been oversold. It requires courage, deep research, and patience. It's about buying value when it's on sale. It's also about holding dry powder, cash and cash equivalents, ready to deploy when these golden opportunities arise. Cash isn't just a safe haven, it's a strategic weapon, giving you the power to act decisively when others are forced to sell. The final piece of the puzzle is a timeless store of value, reimagined for the 21st century: gold and its digital counterpart. For thousands of years, in times of currency debasement and geopolitical turmoil, humanity has turned to gold. It's the ultimate insurance policy against the unknown. As central banks around the world continue to print money and governments accumulate debt, the case for a non-sovereign store of value becomes stronger than ever. Smart investors understand this, allocating a portion of their portfolio to physical gold or gold-backed ETFs as a hedge against inflation and systemic risk. But in 2025, there's a new player on the field: Bitcoin. While still volatile, a growing number of institutional investors view it as digital gold, a scarce, decentralized, and globally accessible asset. They aren't betting the farm on it, but they are taking a calculated position. The strategy here isn't about getting rich quick. It's about wealth preservation. It's a strategic allocation to assets that exist outside the traditional financial system, providing a layer of protection that stocks and bonds simply cannot offer. It's a nod to the past and a bet on a decentralized future, a balanced approach to safeguarding wealth in an unbalanced world. So, where do we go from here? The world in 2025 will be defined by change. The strategies that worked for the last 10 years may not work for the next 10. The average investor will chase headlines, react emotionally, and likely lose. But you don't have to be one of them. The smart investor doesn't have a crystal ball. They have a framework. They invest in the indispensable. They invest in the tangible technological revolution. They hunt for value when others are panicked, and they protect their wealth with timeless and modern stores of value. This isn't just about making money. It's about achieving financial sovereignty. It's about building a fortress for your family's future that can withstand the storms of economic uncertainty. The market may look scary, but for those who are prepared, it's the greatest opportunity of our lifetime. The question is not what the market will do, but what you will do. The power to change your financial destiny is in your hands. It's time to stop reacting and start preparing. Thank you for joining us on this journey. If you found this analysis valuable, consider subscribing to our channel and hitting the notification bell. We're dedicated to helping you navigate the complexities of the financial world with clarity and confidence. Share your thoughts in the comments below. Until next time, think smarter,